Every headline right now is screaming about the next AI stock that's about to explode. Fortunes are being made and lost faster than at almost any point in market history. And somewhere quietly, the most successful investor of the last century would be doing almost nothing. That's not an accident, that's a strategy. Warren Buffett built his fortune by sitting out bubble after bubble. Railroads, dot-coms, crypto speculation. Not because he didn't understand the technology, but because he understood something more important. The difference between a great technology and a great investment. AI might be the most transformative technology of our lifetime. That still doesn't mean every AI stock is a good place to put your money. A great technology isn't always a great investment. During the dot-com boom, the internet changed the world exactly as promised. Almost everyone who bet on it still lost money. Because the technology's success and any single company's stock price are two completely different bets. The lesson isn't avoid AI. It's don't confuse being excited about a technology with having done the work to evaluate a business. Before getting excited about any AI-related investment, separate the question, is this technology real and important, from the question, is this specific company a good business at a fair price? They are not the same question. Stay inside your circle of competence. One of Buffett's most consistent principles is simple. Only invest in what you genuinely understand. Not what a headline explained to you in 30 seconds. What you could actually explain to someone else. AI is a technical, fast-moving field. Most people, including plenty of professional investors, don't actually understand the businesses behind the hype. That gap between excitement and understanding is exactly where money gets lost. If you can't explain, in your own words, how a specific AI company actually makes money and what would make it fail, that's a sign to keep learning. Not a reason to invest anyway because everyone else is. Look for the moat, not the hype. Buffett famously looks for businesses with a moat, something that protects them from competitors long term. In fast-moving tech, most advantages don't last. What looks unbeatable today can be replaced by better, cheaper technology within a year or two. The real question with any AI-era business isn't how impressive is their technology right now? It's what stops someone else from building the same thing next year. When evaluating any company riding the AI wave, ask what happens to their business if a competitor releases something better 6 months from now. If the honest answer is they'd struggle, that's a warning sign, not a reason to panic buy before you miss out. Patience still wins. Every technological revolution creates enormous short-term noise, an enormous long-term opportunity, and those two things get mistaken for each other constantly. Buffett's edge was never predicting the future perfectly. It was refusing to make decisions based on excitement or fear, and instead waiting for a genuinely good opportunity at a fair price, even if that meant waiting years. If you feel a strong urge to invest immediately because you're afraid of missing out, that feeling itself is information. It usually means it's a moment to slow down, not speed up. AI is real. The wealth it will create is real. But being right about the technology and being right about your investment are two different skills. And only one of them requires patience most people don't have. The investors who come out ahead in this era won't be the ones who move the fastest. They'll be the ones who stayed the most disciplined while everyone else moved fast. Subscribe for more.